Hello everyone, it is Suze Orman, and I want to talk to you about something that is on so many of your minds. You have worked hard, you have saved, you have sacrificed, and now you are looking at your retirement account, and you see that magic number, $1 million. For years, maybe for your entire working life, that was the goal. The big one. The number that was supposed to mean you made it, that you were finally safe and secure. But now that you are here, a new question, a scary question, starts to creep into your thoughts. Is it enough? Can you really make $1 million last for the rest of your life? A life that could go on for another 20, 30, or even 40 years? I am here to tell you, with all the conviction in my heart, that yes, it absolutely can be enough. But only if you are smart, only if you are disciplined, and only if you have a plan that is built on a foundation of stone, not sand. So many people get this wrong. They reach retirement, and they either get too scared and hide their money where it gets eaten by inflation, or they get too greedy and chase risky investments that could wipe them out. We are not going to do either of those things. We are going to create a plan that is simple, powerful, and designed to give you one thing above all else: peace of mind. This is not about complicated financial products or chasing the next hot stock. This is about creating a reliable, predictable stream of income that you can live on year after year without ever having to worry about the crazy ups and downs of the stock market. Think of it like this. You are building your own personal pension. You are becoming your own provider of a steady paycheck in retirement. The goal is no longer to grow your money as fast as possible. The goal is to protect your money and make it work for you, generating the income you need to live the life you have dreamed of. It is a shift in mindset, from saver and investor to a CEO of your own retirement. So, I want you to take a deep breath. Let go of the fear and the confusion. We are going to walk through this together, step by step. I am going to give you a strategy that I call my 95-year-old strategy. Why? Because it is designed to be so safe, so secure, and so durable that your money will be there for you even if you live to be 95 or beyond. It is about creating a financial fortress that can withstand any storm. Are you ready? You need to be ready, because your entire future depends on the decisions you make right now. Let's get started. Before we talk about stocks or bonds or anything else, we need to talk about the most important part of your retirement plan. It is the bedrock upon which everything else will be built. I call it your fortress of financial security. What is a fortress? It is strong, it is protected, it is designed to keep you safe from attack. Your financial life in retirement needs its own fortress. This means you must be completely out of debt before you even think about retiring. I am talking about no mortgage, no car loans, no credit card balances. Nothing. Zero. Zilch. You cannot be secure if you owe other people money. Every dollar you owe is a crack in your fortress wall. A mortgage payment is a constant drain on your resources, money that could be used for your living expenses or staying in your portfolio to grow. A credit card balance with its high interest rate is like a thief that sneaks in every single month and steals your security. You have spent your entire life working to build this $1 million nest egg. Do not let debt tear it down. Paying off your home is one of the most powerful financial moves you can make. It immediately lowers your cost of living, giving you incredible freedom and flexibility. It is a guaranteed return on your money. So if you are nearing retirement and you still have a mortgage, your first priority is to get it paid off. Use a portion of your savings if you have to. I know that might feel scary, seeing your account balance go down. But what you are really doing is transferring that equity from a bank's ledger directly into your own pocket. You are buying your own freedom. You are reinforcing your fortress. The peace of mind that comes from owning your home outright is priceless. It is a feeling of security that no stock market gain can ever give you. It is the ultimate control over your own destiny. Once you are debt-free, you have built the outer walls of your fortress. You have stopped the leaks. You have secured your perimeter. Now, and only now, can we start talking about how to arrange your assets inside those walls? This is a non-negotiable step. People who retire with debt are playing a dangerous game. They are living on a financial cliff edge where one unexpected expense or one market downturn can push them over. We are not going to do that. We are building a plan for security, for certainty, and for a retirement filled with dignity, not fear. Your fortress comes first. Always. All right, your fortress is built. You are debt-free. Now we need to create a safety zone inside those walls. This is your cash cushion, and it is the most critical component for allowing you to sleep at night, no matter what is happening in the world. Here is what you are going to do. You need to figure out exactly how much money you need to live on each year. Not what you want to spend, but what you need to cover your non-negotiable expenses: property taxes, insurance, food, utilities, healthcare. Let's say, for this example, that number is $40,000 a year. This is your essential living expense number. Now I want you to take that number and multiply it by 5. In our example, $40,000 times 5 is $200,000. This $200,000 is your cash cushion. Some financial advisors might say 3 years is enough. I say no. For true peace of mind, you need a buffer of at least 5 years of essential living expenses. If you want to be extra safe, and I always want you to be extra safe, you could even go up to 8 years. This money is your firewall. It is the barrier that stands between you and the volatility of the stock market. This is the money that ensures you will never, ever be forced to sell your investments at the wrong time. Where do you keep this money? Not under your mattress, and not in a checking account earning 0 interest. This money must be safe, but it also needs to work for you just a little bit. You will put this cash cushion into the safest, most liquid places you can find. I am talking about high-yield savings accounts, short-term certificates of deposit, or United States Treasury bills. You can build a CD ladder, with some maturing every year, so you always have access to cash. The goal here is not to get rich. The goal is capital preservation. You want this money to earn a little interest to help offset inflation, but its primary job is to be there, 100% of it, when you need it. Think about what this does for you psychologically. When the stock market has a terrible year and drops 20 or 30%, which it will do from time to time, you will not panic. Why? Because you have 5 years of living expenses sitting safely in cash. You do not need to sell a single share of stock to pay your bills. You can simply live off your cash cushion and give the market all the time it needs to recover, which it always has. This is the secret to staying invested for the long term. It is the ultimate defense against making emotional, fear-driven decisions that can destroy your retirement. This cash cushion is your power. Now that your 5-year cash cushion is set aside and secure, we can talk about the rest of your money. In our example, we started with $1 million and set aside $200,000 for the cash cushion. That leaves us with $800,000. This is the money that will become the engine of your retirement. Its job is to generate a steady, reliable, and growing stream of income for the rest of your life. And how are we going to do that? We are going to invest this money in a carefully selected portfolio of high-quality blue-chip companies that have a long history of paying and, most importantly, increasing their dividends. I am not talking about chasing high-yield, risky stocks. I'm talking about the bedrock of the American and global economy. Think about the companies that provide things you cannot live without. The company that provides your electricity, the company that makes the toothpaste you use every morning, the company that provides the telecommunications for your phone, the company that makes the medicine you might need. These are essential businesses. They make money in good times and in bad times. And the best of these companies share their profits with their shareholders in the form of dividends, and they make it a point of pride to increase that dividend payment every single year. You do not need to be a stock market genius to do this. You are not trying to pick the next hot tech company. You are looking for stability and reliability. You can build a portfolio of 15 to 20 of these dividend powerhouses across different sectors of the economy to ensure you are diversified. Look for companies that are known as dividend aristocrats or dividend kings, companies that have raised their dividends for 25 or even 50 consecutive years. A track record like that is a powerful statement about a company's financial strength and its commitment to its shareholders. This is your new paycheck. The beauty of this strategy is its simplicity. Each quarter, these companies deposit cash, your dividend income, directly into your brokerage account. This is real money you can use to live on. And because you have chosen companies that consistently raise their dividends, your income will likely grow over time, helping you keep pace with inflation. You are not relying on selling shares to create income. You are living off the fruit of your investments, while leaving the tree itself to continue growing. This is how the wealthy stay wealthy. They own income-producing assets, and they live off the income, not the principal. Now, this is the section where most people fail. It really is the most important rule of this entire strategy, and you must burn it into your brain. You must never, ever sell your high-quality dividend stocks in a market downturn. I want you to say it out loud with me. I will not panic and sell. When the headlines are screaming about a market crash, when your account balance is down 10%, 20%, or even more, when your neighbors are panicking and selling everything, you will do nothing. You will stand strong, just like the fortress you have built. Why? Well, because you have a plan, and this is a part of it. Market downturns are normal. They are a feature, not a bug, of investing. They are the price we pay for the long-term growth that the stock market provides. But if you have followed the plan, you are completely insulated from the short-term noise. Remember that 5-year cash cushion we set up? That is your lifeline. While everyone else is being forced to sell their stocks at bargain basement prices just to pay their bills, you are calmly living off your cash reserves. You are giving your portfolio the one thing it needs to recover: time. Selling in a panic is the single most destructive thing you can do to your retirement. It turns a temporary paper loss into a permanent, devastating, real loss. Think about what is actually happening during a market downturn. The stock price of your companies may be going down, but are those companies going out of business? Is the electric company going to stop providing power? Is the consumer goods company going to stop selling soap? No. These strong, essential businesses will continue to operate, continue to generate revenue, and in most cases, continue to pay their dividends. In fact, your dividend income should remain relatively stable, or even continue to grow, right through the downturn. You have two sources of income to live on: your cash cushion and your dividends. You are not dependent on stock prices. This is a profound shift in perspective. You stop worrying about the daily value of your portfolio and start focusing only on the income it generates. The stock price is just noise. The dividend check is the signal. When you adopt this mindset, market crashes actually start to look like opportunities. The dividends you receive can be reinvested to buy more shares at those temporarily low prices, which will lead to even more income in the future. You are protected by your cash, sustained by your dividends, and you are able to weather the storm without a scratch, emerging stronger on the other side. This is the discipline that separates successful retirees from the ones who run out of money. We have built our fortress, created our cash cushion, and established our income engine. Now, we need a rule for how to draw money from this system in a sustainable way for the rest of our lives. The rule is simple, it is time-tested, and it is known as the 4% rule. But we are going to use a slightly more conservative and smarter version of it. In your first year of retirement, you will add up all your sources of income, your dividends, any pensions, Social Security, and if you still need more money to live, you can withdraw an amount from your portfolio, but the total withdrawal should not exceed 4% of your initial investment portfolio value. Let's go back to our example. You have an $800,000 investment portfolio. 4% of that is $32,000. This is your maximum withdrawal for the first year. Let's say your dividends for the year total $24,000. That means you would only need to take an additional $8,000 from your cash cushion to reach that $32,000 spending target. The 4% rule is not a license to spend 4% of your portfolio's value every single year. It is a guideline for a ceiling on your withdrawals. The goal is always to live on your dividends first and only supplement from your cash cushion as needed, staying under that 4% total. The next part of the rule is how you adjust for inflation. In year 2, you can increase the dollar amount you withdrew in year 1 by the rate of inflation. For example, if inflation was 3%, you could increase your $32,000 withdrawal amount by 3%, which would be $32,960. You do not recalculate the 4% based on your new portfolio value. This is a critical point. By only adjusting your withdrawal amount by inflation, you disconnect your spending from the market's wild swings. If the market has a great year and your portfolio grows to $900,000, you do not start spending more. You stick to the plan. This discipline is what makes the money last. This simple rule prevents the biggest mistake retirees make: increasing their spending too much during good years. When the market is up, it is tempting to take a bigger vacation or buy a new car. But that is a trap. By keeping your withdrawals steady and predictable, you allow your portfolio to retain its gains during the good years, which provides a bigger cushion to absorb the bad years. The 4% rule, when combined with our cash cushion and dividend strategy, creates a powerful system for generating a reliable, inflation-adjusted income stream that has a very high probability of lasting for 30 years or more. It is your spending governor, keeping you on the road to lifelong security. I need to have a serious talk with you now. When you are retired, your relationship with risk has to change completely. Your money-making days are over. Your goal is no longer to get rich. Your goal is to stay rich. This means you must avoid the temptation of risky or complicated investments that promise high returns. You will be approached by people selling all sorts of things: complex annuities with hidden fees, private real estate deals, cryptocurrencies, speculative stocks. They will sound exciting. They will promise to solve all your problems. I want you to hear my voice in your head saying one word: no. These are siren songs, luring you toward the rocks that will wreck your financial ship. Your $1 million nest egg is the result of a lifetime of work. It is not a plaything. It is not speculative capital. It is the money you need to survive. Taking a big risk with it now is a bet you cannot afford to lose. If a 30-year-old makes a risky investment that goes to zero, they have decades of work ahead of them to make it back. If you do, it is game over. There is no second chance. There is no do-over. You must protect your principal at all costs. The plan we have laid out is beautiful because of its simplicity: a cash cushion in safe accounts and a portfolio of high-quality dividend-growing stocks. That is it. You understand it. You can control it. You do not need a PhD in finance to manage it. When someone tries to sell you an investment and you do not understand exactly how it works, how it makes money, and what all the fees are, the answer is always no. If it sounds too good to be true, it is. There is no secret to getting a 12% return with no risk. That is a fantasy. A safe and sustainable retirement is built on realistic expectations and proven strategies. So I want you to make me a promise. Promise me you will stick to the plan. Promise me you will prioritize safety over returns. Promise me you will say no to complexity and yes to simplicity. Your peace of mind is worth far more than any extra percentage point of return you might get by taking on more risk. The goal is to sleep well at night, knowing that your income is secure and your future is protected. Let others chase the hot trends and gamble with their futures. You are the CEO of a secure corporation, your retirement, and you will make prudent, conservative decisions to ensure its long-term survival. In a world that screams for instant gratification, the most powerful tool you have in your retirement arsenal is something that feels almost old-fashioned: patience. The strategy we have designed is not a get-rich-quick scheme. It is a stay-secure-forever plan. It works slowly, steadily, and reliably over time. It requires you to trust the process and resist the urge to constantly tinker and make changes. Once you have set up your cash cushion and selected your high-quality dividend stocks, the most important thing you can do is often nothing at all. You must let the plan work. Patience is what allows you to ride out market downturns without panicking. It is the quiet confidence that comes from knowing you have a 5-year cash buffer and do not need to react to scary headlines. Patience is what allows the magic of compounding to work on your dividends. When you reinvest those dividends, you buy more shares, which generate more dividends, which buy even more shares. It is a slow and steady snowball of wealth creation that happens in the background, even when the market seems to be going nowhere. This process takes years, not months, to show its true power. Think of yourself as a gardener. You have carefully prepared the soil, paid off debt, planted your seeds, bought your stocks, and set up an irrigation system, your cash cushion. Now, you cannot stand over the garden every day digging up the seeds to see if they are growing. You must have the patience to water them, reinvest dividends, and protect them from storms, not selling in a panic, and simply let them grow. Your portfolio needs time. The companies you own need time to grow their businesses and increase their dividend payments. Your job is to be the patient caretaker of your own financial garden. This requires a deep sense of discipline. You must resist the noise from financial television, from the internet, from your friends who are bragging about their latest winning stock pick. Your journey is different now. You are not in a race. You have already crossed the finish line of accumulating your nest egg. Now you are on a long, steady walk of preservation and income generation. Embrace the calm. Embrace the boring nature of this plan. Boring is beautiful in retirement. Boring is safe. Boring is secure. Your patience will be your greatest virtue and the ultimate guarantor of your long-term success. So, there you have it. A simple, strong, and reliable plan to make $1 million last for the rest of your life. We have talked about building your fortress by eliminating debt. We have talked about creating a 5 to 8 year cash cushion for ultimate security. We have talked about investing the rest in the world's best dividend-growing companies to create your own personal pension. We have established the unbreakable rule of never selling in a panic and the disciplined 4% withdrawal strategy to make your money last. This is a blueprint for a retirement of dignity and peace of mind. But here is the truth. A blueprint is only as good as the builder who uses it. I can give you the plan, but only you can execute it. Now you have to ask yourself 3 questions, and you have to be brutally honest with your answers. First, are you ready? Have you done the emotional work to shift your mindset from accumulation to preservation? Are you ready to embrace a boring but effective strategy? Second, are you willing? Are you willing to pay off your debt, even if it means your savings number goes down temporarily? Are you willing to be disciplined and patient, even when the market is volatile? And third, are you able? This is a crucial point. While this plan is simple, everyone's situation is unique. You might have different healthcare needs, family situations, or tax considerations. This is why I always say that you should consider sitting down with a qualified, fee-only financial advisor who you trust, an advisor who is a fiduciary, meaning they are legally obligated to act in your best interest. They can help you tailor this blueprint to your specific circumstances and ensure you are on the right track. Do not be penny wise and pound foolish. Getting good advice is an investment in your future. The power to create a secure retirement is in your hands right now. You have the money. Now you have the knowledge. The final ingredient is action. I want you to take some time today. Sit down, turn off the television, and think about your own plan. Write it down. What is your fortress? How big is your cash cushion? What will your income engine look like? The sooner you create your plan and put it into motion, the sooner you can stop worrying about money and start enjoying the retirement you have worked so hard to achieve. You can do this. You are in control. Now go and build your secure future.